Hi friends, welcome back to FinveStocks. If you start learning candles in a traditional way, you will end up learning more than 50 types of candlestick pattern and end up using none, as it is quite difficult to remember all the candlestick pattern and don't know which one to use when. Let's understand why we need to understand the candlestick pattern. The pictorial price representation. Just as a picture is worth 1,000 words, a candle is worth many words, price codes and interpretations. So for making profit in stock market, one need to time correctly for entry and exit. Your success depends on both what trade you enter and when to enter. Mainly candlestick address the second part, that is when to enter. Just a summary of candlestick, those who are new to this video. A candle is a graphical representation of prices traded during a certain time period. So here we are talking about a 5-minute candle. So a 5-minute candle will show price range that prevailed during the particular 5 minutes. The first traded price that forms the opening price and the last traded price during this 5 minute shows the closing level. Also, the candle will represent the highest high point as well as the lowest low point using shadows or wicks. This forms the 5-minute candle. If the closing price is more than opening price, it is called a green candle and it is bullish in nature. Similarly, if the closing price is less than opening price, it is bearish in nature and also shows red in color. This is just a recap. In this video, we will see the basic anatomy of candles and also see the important factors one must understand while reading candles. To make the candlestick study simple, forget all the candlesticks you know and categorize them into 3 different groups. First one is the giant candles, then the dwarf candles, and the long-legged candles or the rejection candles. Rest all the candles you know are regular candles with normal bullish or bearish candle based on the color of the candle. This will make your life easy to understand the candlestick as well as technical analysis. If you are new to this channel, please consider subscribing this so that you will get notification when I post the next continuation video. If you like this content, please like it and share it to those who wish to join the stock market. For easy understanding of single candlestick pattern, we will split the candles into 3 basic types: the giant candles, the dwarf candles, and the rejection or reversal candles. The giant candles are the marabozus, the dwarfs are the dojis or spinning tops where the body is shorter compared to the previous candles, and the rejection or reversal candles are the long-legged candles. Out of these, we covered the first one, that is the giant candles, in our last video. The giant candles are the marabozus, which shows strong momentum and which will continue, let it be bullish or bearish. So this we covered in our last video. Please watch the video which is pinned on the I button. It is good to watch the marabozu before continuing this video. In today's video, we will see in detail about the dwarf candles, that is the dojis, the spinning tops, etc. Normally the dojis and spinning tops are called indecisive or neutral candles. But it is always not same. It depends on the location where it appears. More about that we will see in our today's video. When we say dwarf candles, it is compared with the previous candles. No need to measure the body of the candle and all. It is subjective. Only need to compare with the previous candle bodies. The dwarf candles is one where the body of the candle is very small or negligible. That means the opening price and closing price is almost the same or it is at the same level. If the body is small, that means there is a small gap between opening price and closing price. And if it is a straight line, that is perfect doji, then that means the opening price is exactly the same as closing price. A doji is a candlestick where the opening and closing price are equal. Doji in Japanese, it means blunder or mistake because the opening price and closing price can't be same. If it happens, that is a mistake. That is why it is called a blunder or mistake candle, that is doji candle. There are mainly 4 types of doji candles. The first one is a common doji, that is also called classic doji. The second one is long-legged doji. Third one is gravestone doji and the fourth one is dragonfly doji. Each one we will see in detail. First one is the standard doji. Standard doji is having upper and lower wick of equal length. It is neither bullish nor bearish. It is indecisive candle. The second one is long leg doji. Here, one of the leg of the doji will be longer. The price closed much higher than the trading day's low. There are chances that the stock price will increase following the appearance of long leg doji. Long leg doji will have normally extended upper or lower wicks. It is an indecisive sentiment with higher volatility. The third one is dragonfly doji. The dragonfly doji will have no wicks on the top and a big long legged wick on the bottom. Because this type of doji usually appears at the peak of uptrend, it is possibly signifies a reversal of the current trend. If it appears at the bottom of downtrend, which signifies rejection of lower price. So it signals possible upward trend reversal. The next one is gravestone doji. It is just opposite to dragonfly doji. Here there is a missing wick on the lower spot and the wick on the top side will be very long. So this is just opposite to dragonfly doji. Normally the gravestone doji appears on the top of the uptrend. It shows a price rejection on the top. So it will show a trend reversal. Here in this chart we can identify some of the dojis and the trend which followed after that. So it is more important where the doji appears than the appearance of doji. The location matters. One more similar type of candle is the spinning top. It is same as doji. The only difference is there is a small body appear on this candle. The small body is because of the difference in price. That means the difference in opening and closing price. Based on that, it will termed as bullish spinning top or bearish spinning top. If the close is above open, then it is a bullish spinning top, and if the close is below open, it's a bearish spinning top. Spinning top candle is a single candlestick pattern. The color of the candle does not matter much. The body of this candle is very small. The shadow has to be long on both the sides. The candle suggests indecision as the spinning top forms when there is a pressure from both the buyers and sellers. It resembles spinning top toy. That's why it got the name spinning top. Here we can see the appearance of spinning top in a candlestick pattern or in a chart. Here in this chart, spinning top appears on the bottom of the downtrend. So it shows a reversal. Similarly, if the bearish spinning top appears on the top of an uptrend, it will show a reversal. Pro tip. Higher the time frame, higher the accuracy and reliability of the candle. So how to choose the timeline for a particular trade, that I already posted in my earlier video. Link provided in the I button above. Now let's try to identify some of the spinning tops and dojis in the live chart. So for that we will go to Kite. So we will open some of the blue chip. Say let's take HDFC Bank or Reliance. Okay, we will go with Reliance. Okay. So we'll slightly zoom the chart. Okay. So let's try to identify some of the dojis and spinning tops. So here we can see. Some of the dojis over here, perfect dojis with no body, literally no body, and wick on both the sides. How to trade the doji, how to trade the spinning top, that we will see in detail later. So now only we will try to identify some of the dojis as well as spinning top, just to have a feel like what is doji and what is a spinning top. So here you can see these are two dojis. Here again you can see on long legged doji. Here you can see a perfect spinning top. Here also there is a perfect spinning top. Here you can find some doji. As we said, when the market is on the uptrend, and if you find some doji, and this can be an indication for market to come down. So need to trade accordingly. But this will not be always right. So whenever on the uptrend, if you are expecting 100% reversal, that is not possible. So you need to have some other confirmation along with these dojis for taking the trades. Let's see some further candles. So here we can see market is in uptrend. Here there is a spinning top and it got reversed. Here you can see one spinning top over here, spinning top over here. We can see some dojis over here. Similarly, we can see some spinning tops over here. can see the doji here, doji here, spinning top here, spinning top here, spinning top here. So you can identify a lot of spinning tops and dojis once you start watching the chart. And don't wait for the perfect doji. If you see here, this one you can consider as a doji because the body is slightly thin. So don't wait for a doji to have a perfect line over here. So that will be on the textbook, but on real case, this type of dojis are very rare with zero body. So where the body is minimum, you can consider that as a doji and move forward. So these are some of the examples. So you try to identify some of the dojis and spinning top on a live chart, and practice make everything possible. And once you start practicing the chart, you will find it easy to understand the dojis, the other candlestick pattern and you can easily take trade on that. In our next video, we will see in detail about the most important candle which will indicate the trend reversal, the rejection or reversal candles, that is the long-legged candles. So don't miss it. Stay tuned.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.